webinar, last webinar of the year. Can you believe it? 12th one. Started out the year doing the recap. Going to be doing the wrap up now. Joined here by Abby Kerr, our account director. Abby directly works on many of our high profile accounts, overseeing all accounts through different account managers as well. We're going to learn about the inner workings of deals we worked on this year, other industry leading campaigns, talked about what we saw produced, talked about what we saw that did not work, and take those findings and apply towards 2025 campaigns. Abby, you excited to do this?
Absolutely. It's kind of I'm here and instead of Danny. Danny was intending to be here, but I'm delighted. I'm happy because we look at this all the time. We love these campaigns. So it's really fun to kind of reflect back on how the year was. And there were lots of highlights and also some lower points. And so I think it's really good to kind of take stock and see really how did it turn out and what do we have expecting for 2025. I can't believe how soon it is that we're going to be in the new year.
Absolutely. It certainly flies by. And yeah, should mention Danny is one of the many right now who has a bug and is out sick, and
Yeah.
could barely understand him when he was saying he couldn't make it today. He was out past couple days. But gonna be able to walk through everything that we put together here. If you're not familiar with DNA, we've worked on over 500 investor marketing campaigns that have collectively produced nine figures of capital. I've worked on over 130, I believe closer to 150 this year, and that's where all of this data comes from. We are not just scholars that research the topic, although we do. And every Monday morning, we're diving deep into King's Crowd, looking at info from Crowdfund Capital Advisors. So beyond just what we see on our campaigns, this is taking from that data from the entire industry. And as always, Brendan, our creative director, along with Jake, Jack, on the creative staff, graphic design side, put these decks together in conjunction with Khalil, our head of content marketing. As you can see, was not updated for Abby as we were expecting Danny to be here. Danny's the head of business development, has worked on hundreds of deals, and since the beginning of equity crowdfunding. Um, Abby, what made 2024 different in the equity crowdfunding space? Reg CF has been in effect since May of 2016. We saw the increase where you could raise 5 million instead of being capped at 1.07 million in March of 2021. Regulation A plus went from 50 to 75 million from there. What's been different here in 2024?
2022 was a really big year for Reg CF, and it was relatively easier for a lot of campaigns to hit their goal. So in 2024, we definitely saw that the top campaigns received the lion's share of the investing. That wasn't different than 2023, but that part has stayed the same, right? So really the top 10% of campaigns get the bulk of the funding. And oh, hey, Brendan. Um, um, but that really means that marketing is so essential, right, for every campaign. Otherwise, you've got to do everything you possibly can to stand out. So, you know, what was different? Jason, I don't know. What would I don't know what you guys have prepared for this. I'm sorry. I'm gonna turn it back over to you.
No, but it's important to see, mention what you see, in the field, working on these campaigns directly. We've had,
Mm.
repeat rounds from some of the top Regulation A plus issuers, have had Reg CFs of virtually no audience, Reg CFs that are doing multiple rounds and with huge audiences launching. Worked on Reg CFs that had over 100 brick and mortar retail locations, have worked on, a full spectrum of different deals. I
Mm.
would say there's a larger focus on marketing that I've heard from issuers than in years past. Abby, you mentioned that time of 2022. I'd actually pointed out from pandemic, March 2020, till about February, March of 2022, where success rates were higher in the sense that there was more money being moved around. Alternative investments were up. The retail trader, the Robinhood investor, we're really emerging into the marketplaces, and we're seeing that happen right now as well. But the industry's been more of a steady point, which is great because you look at the VC space, you look at other areas where groups go to raise capital, and a lot of those numbers have dropped. And I've heard from founders directly that it's been harder than ever
Mm.
to raise over the past couple years offline, and then they've seen success online, but really by following these digital marketing best practices. Uh, there were periods after Facebook and Apple got in the way of advertising tracking. It was really Apple with the iOS 14.5 and later updates requiring users to opt in to be tracked off app, and that affects pixel tracking. For a while afterwards, there was a misconception that ads don't work, and we've seen
Mm.
that turn around this year. We've seen a lot more financial publishers come into the mix. Valuation increase in multiple rounds for campaigns with growth in valuations and larger raises. We're seeing both early stage and growth stage as defined by King's Crowd. That's where we get a lot of our analytics. The valuations for those deals go up. Maybe it's just inflation and dollar not going as far. But looking at comparables in the public markets, looking at merger and acquisition activity, looking at multiples and applying revenue, profit. A lot of companies that are further along coming into the space. We've
That's
seen
what I was going
valuations
to
grow
say.
this year.
Yeah. I think the valuation growth trend is more about just further, like companies that are more established. They have more traction. They have probably revenue, a lot more going on than a pre-revenue company. And we do still see pre-revenue companies having success and raising money online. But I think the trend around valuation increase is largely due to more advanced companies in terms of their commercialization pathway
Mhm.
coming to digital marketing for crowdfunding.
Beyond valuation, as you're mentioning, maturity in the industry with seasoned
Mm-hmm.
founders, more established groups participating. I remember the early days of equity crowdfunding. I remember, pre-Reg CF launch, we had worked on Regulation D campaigns, using programmatic advertising, filtering in high household income, high net worth data to reach accredited investors, as 506C allows for solicitation to accredited investors, and being in whiteboard meetings for hours, days at some in some circumstances, trying to determine what deals are going to go live on these platforms, what's going to work in terms of marketing. We were working with many groups in the VC space around that. And there was a stigma in the first few years, 2016, 2017, 2018. It started shifting around there. Again, really got its footing in 2020. But in deals that can't get funded offline go online. That's what the generalization was. And we've seen some of the top accelerators, the top VC funds, firms take their deals here. We work with groups that are about to go public and have watched them IPO, uh, but they needed to get a high enough amount of shareholders before doing so. There's all types of advantages to using these routes. And if you're a large if you're an anchor investor and looking to lead a large part of the deal, it makes a lot of sense to tell your portfolio company, hey, run an equity crowdfund campaign as well. I'll kick it off with my purchase, my investment, and then let's use that social proof, that third party validation to get more traction of the deal. We should get a response from the portal's audience. If we're self publishing using a tech platform, could still, point at how much is raised, talk about some of the partnerships, and let's get a lot more people interested in this. Let's use it as a marketing tool, not just getting the capital, but getting thousands of investors in, having them act as ambassadors, having them, peer-to-peer marketing, bring more investors in, depending on the product, bring in customers, bring in clients, get these super users. This is what I'm hearing in the space. I just had Brian Belay from King's Crowd on my podcast. It's a sneak peek. It's coming out. later this week. I believe that'll be episode 182 of Test Optimized Scale. And this is some of the key things he points out, speaking with many issuers and looking at the data directly. Abby, anything to add to that in terms of maturity?
Well, not necessarily maturity, but about CEO participation in the fundraising, right? So we see as a trend over time that the CEOs who take on more of a leadership role and really stand out in front of their campaigns have the most success. A surprisingly large amount of the total raise often comes from second and third degree audiences. Um, People always say that, you know, people invest in people, right? And so we see almost always that when the CEO takes that leadership role and really leads the fundraising effort using their own personality and standing out, really doing all of those outreach efforts, sort of a grassroots push around uh, engaging and activating your existing audiences, to me, that is a hallmark of the more successful raises. Is really the CEOs leading the way.
It's such a good point. The most proactive founders have the most successful raises. If you look at, top campaigns of this year, if you look at, Energy X, it's Teague at the front. If you look at Boxable, it's Paolo and Galliano. It's Charles at Atom Beam. You can name these founders by their first name, maybe just as an industry enthusiast, but at the same time, it's true. It provides that connection to the brand. If it was just a logo and those founders were behind the scenes, the relatability, the trust would likely be down. That feeling of, hey, we have a relationship with the founder, with the owner, even if they've never met them in person, they just see them on their social media feed, see them in their email box, see their content on a regular basis. So it's a great thing to point out there, Abby. And use of new platforms and targeting strategies, focused on specific industries. Another trend that we've been seeing here in 2024. So, having an issuer um, incorporate vertical media, their industry specifically, email newsletters there, conferences there, always brings in new audiences. Also, the use of more marketing platforms. It 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 goes a long way. We've seen some groups, almost like the TikTok shop, using live broadcasts to bring in investors. We've seen email newsletters, not just in the financial publishing space, but more news, media, younger audiences that are active and typically more household income. The news platforms that they may follow on social media, offering ad placements, offering sponsored content, new platforms as a whole.
Well said, Jason. I don't know if I have anything to add. Hmm.
What are we looking at next here?
More sophistication in advertising and influencers, right? So one of the things that we're often saying is about how you, as much as we want the CEO to stand out, and that's extremely important as the leader of the company, and you also want to have other people, the feeling that other people are also talking about you. And some of this is something that we can create as marketers by enrolling and engaging influencers, and some of it happens organically. Maybe that you have people in your network who you can just tap and say, hey, you have a huge audience, how about you tell them all about our um, really excellent company, and why you should invest right now. You've got to be asking yourself, how can you get other people talking about you, right? Influencers are a great way to do it. Sometimes you have someone in your network, sometimes you might hire someone. I love it because you just want to have more people telling your story, right?
And the term influencer, it's thrown out there a lot. It's broad. People think it's, Kim Kardashian and Mr. Beast, and that is true. Get them to talk about your deal. But there's all different types of tiers. And when you look at actual engagement rates on social media of influencers with millions of followers, the percentages are pretty low. A
Mhm.
micro influencer goes up to 100,000 followers. A nano influencer goes up to 10,000 followers. You may find success with individuals who have 1,000, a few thousand followers, but just in high volumes talking about the deal. It's all a matter of how much peer-to-peer marketing, social sharing is going as a whole. So I want to talk about influencers being incorporated to the ads, but just in terms of that influencer marketing and effect, I put out articles with the Forbes Agency Council, and I've had articles even on Forbes with under 1,000 views. I've had articles with over 40,000 views. And when I try to figure out, hey, what's the difference here? Both articles were well written. Or at least, I was told so by, immediate peer group. It was the sharing. One of the largest articles, there was over 100 reposts of the article. People I don't know, people on Twitter, X, uh, people quoting and featuring, giving their analysis and articles, and repurposing uh, gives the social media algorithm something to play with. This could be getting a bunch of people with notable audiences, a bunch of LinkedIn connections with notable audiences commenting on your LinkedIn post. And that can really crank up the LinkedIn algorithm. We could talk about the differentiators for each algorithm. I mean, TikTok, they have a discovery engine that doesn't even require you to have a large audience or the people talking about you to have a large audience. It'll keep going in and getting shared with more people that are similar based on the engagement levels. But with LinkedIn, it's not just the person commenting showing up on your feed. It'll likely show up in the feed of people who follow them, and it keeps continuing and continuing and continuing and continuing from there. But we're talking about paid advertising on this page
Mm.
that we were just looking at, and with paid, you can then take the influencer and put them directly in the ad. And, maybe you get a day, 2 days of strong performance after they post. Likely it'll be, in a story or something that disappears. Grid post, maybe it's got a time allotment attached to it based on the deal you have set up with them. Maybe they're a shareholder and they keep it forever. Either way, it's going to have spikes in terms of performance. However, you can use advertising and have it run for the duration of your campaign. This isn't anything new for us. I recall the first Regulation A Plus campaign we worked on, Rayton Solar. Bill Nye, the science guy, featured in the offering page video, came on board as a partner, had a couple posts, few posts in there throughout the course of the year that the campaign was live. But advertising ran for the majority of that year. Uh, there was a month or so we slowed his creatives down. A lot of comments on there. We had to manage a bit, but that's a different story. I could tell you about what to look at when choosing the right influencer. The focus here is that there was 4.2 million tracked on that ad pixel using those creatives, far more than was produced just in the post themselves, even with Bill's audience, in the millions. So you can get syndication, if you will. You think about 90s sitcoms and how they're still playing today through syndication. You can get that for your advertising. You could also use user generated content and find people without a notable audience that you could feature in the ads and still have that recommendation style creative.
I'm often doing that with my campaigns. I don't really even look too much about the size of the audience of the person who I'm engaging on the influencer side of things. I'm more concerned about using it as an ad because we
Hmm.
can control that, and we just see it perform again and again. So,
Hmm.
uh,
And saw many deals do that this year, not just
mhm.
ours. It's something that's on the rise. So, best platforms, 2024. We looked at these 2023 numbers, and there's a lift in deal maker activity. um, less on Dalmore and Republic per King's Crowd's most recent article. And, WeFunder and Start Engine on those top spots in terms of amounts raised in Reg CF. WeFunder had 11.3 million in November. Start Engine, I believe it was nine and some change, 9.2. WeFunder had some large campaigns. WeFunder also has around 205 issuers on Reg CF Live at the moment. Start Engine around 119. Dealmaker closer to 41. And right off all of these, we try to watch it pretty closely, but seeing an increase right now in the amount of deals live. Earlier this week, it was in the 640s. I believe it's had some campaigns closed in the 630s right now. But if you look at 643 live Reg CF deals, that's more than what we've seen. Brian Belay at King's Crowd was telling me to date. Uh, I have trouble recalling a period that was this high as well. I think there's been other periods it's been close, but volume of deals is at a high. Uh, and as mentioned here, Dealmaker gained traction with significant raises in September. Equifund focusing on fewer campaigns, but with consistently, hitting multiple seven-figure amounts. Deals like Pythias Energy, Mivium. They work with email news publishers and financial publishers to hit those types of volumes. So it's really interesting to see what's working, not working in this space. We measure things like average raise amount, per deal. Last week's performance actually saw higher average raise amount. Looking at the King's Crowd data on WeFunder than Start Engine, where I've never seen that before either. Start Engine typically has a higher raise amount per deal. So a lot of interesting things happening in the space right now, and it seems like everyone's bringing on more offerings onto their platform. Uh, End of April, there's an additional filing that's required, and the numbers drop. So May, June, it was lower and has really picked back up.
Yeah, there are about 200 more live campaigns right now than there were at the beginning of May. But the total amount raised is about the same, which means that, on average, each deal is getting less.
Mhm.
Hmm. Bigger
Bigger
deals.
deals, higher volume.
Yeah.
Abby, you want to tackle through these 3 points?
Sure. Um, Bigger deals, higher volume, right? So we are seeing some really excellent companies raising a lot of money online. It's very exciting to work on the top deals. Um, Reg A Plus, you can get up to 75 million. Only one company's done it this year. The Energy X, after I think about 2 years of uh, fundraising, finally did hit their $75 million cap, which is really impressive. And it took a substantial amount of effort on their behalf. A lot of marketing involved. Direct issuer raises are becoming more common, right? We see instead of people, leveraging Start Engine or WeFunders audience, they're self-publishing. That they have to create all of the traffic to their own offering pages, but it has a trade-off of also having more control over what you're presenting on what I consider your key sales tool for selling these securities, is your offering page, right? We definitely see more of those. Stage-based strategies. Jason, do you want to talk about this one?
Yeah. So, you know, based on the stage of capital raise and brand growth, the campaign could look different. Many of the issuers we're speaking about, it's not their first round, first rodeo, as they say, and the investor audience has grown substantially. So, uh, Adam Beam, a top Regulation A plus issuer right now, crossed 15 million yesterday, with an extension because of the demand, and over 4,000 investors on this stage, but three successful Reg CFs before this, uh, over $3 million on each of those rounds. So you look at how that audience of actual investors has grown. You look at how the trail, like the database of influencer coverage, publisher coverage, financial email newsletter mentions, sets a stronger starting point, a stronger foundation, and gives a lot more to point out throughout the course of the campaign. So all of these things coming into effect, whether it's a direct issuer raise, whether it's on a portal, all of this is maturing here in 2024. Seeing advertising platforms like Robinhood Snacks, a lot of the email newsletters. Some have been watered down in terms of the response, the return on ad spend we would anticipate here in 2024 versus the same newsletters in 2022. Even the ad placements, different return on ad spend metrics that we see and can be tougher to track with some of those publishers at different points here in 2024 alone. It's not a stable return level necessarily, but definitely seeing the always be raising sentiment produce well for the top issuers in the space here. And have a few examples. Abby, I know you have experience with these guys. You want to talk a little bit about a few of the groups? I know you were mentioning Energy X, which hit the full 75.
Yeah.
So,
I have
and
such
not a
respect
campaign
for
we
all
worked
three.
on, by the way. Just to emphasize there, have worked with Energy X on past rounds, but really applaud what they've been able to do. Full 75, first in their category. And then, any findings, any notes you want to share with some of these others?
Yeah. Um, just so delighted to be able to work with companies like Boxable and Adam Beam and Mobile. They have Boxable, a lot of respect for the team there. They've raised over $170 million across multiple raises. I feel like the founders do a brilliant job of really engaging people with their personalities and then tying that back in with the company mission, company traction. Really, they have a very robust pipeline of content marketing. They're always advertising. They're definitely in the financial newsletter placements. Um, they have factory tours, right? That's, I think, really engaging. Um, Obviously, I have a lot of respect for all of these companies. Adam Beam is just a fantastic example of another CEO who's standing out in front of his raise, and it's been so important that he's been able to do these kind of authentic, almost so it feels very personal, selfie style videos. Very, very frequent webinar presentations. We always are emphasizing how important webinars are as these sort of later stage decision-making activities where people want to hear from the founders, listen to them give the pitch deck presentation, maybe have a chance to ask questions, listen to the types of questions other people are answering. Adam Beam they're very consistent about hosting their webinars. And I think that has helped. I mean, I can only imagine what would have happened if they didn't do that, right? Um, I believe that they would not be where they are, having raised of what 15 million right now on the Reggae Plus. It's very exciting. A lot of hard work involved, and hardworking team behind this fundraising effort. Same goes for Mode Mobile. Dan's got a great personality. He really stands out in front of his deal. Dan Neves, the CEO there. They have a huge amount of company traction. So they're always talking about how they have over 33,000 investors in their community. That's a really important thing for them, right? Showing no one wants to be first to invest. Everybody wants to go along with the crowd. The crowd effect is absolutely real. Every single one of these deals that we're looking at here leverage that in various ways. It's always a component of almost every single message that they share is that social proof element that shows other people that they're trustworthy because there's all this traction behind them. Talking about partnerships, they're talking about revenue, they're talking about company growth. And I think that the storytelling element is really important, right? So at the very beginning of like really any message, you keep in mind everybody has extremely short attention spans these days. You can lose them in a flash. So in order to keep their attention, I think all four of these do a really good job of having strong hooks. You got to test and figure out what it is that's going to really grab the attention. And that's a fun part for us, right? Our motto is test, optimize, scale. You can see it in the upper right hand corner here. Um, and so I believe that testing and then leaning into what's working, right, is it's well, we've seen it work over time, right?
No shortage of story with any of these issuers.
Mm-hmm.
It's so impressive to me the amount of updates that are being put out, and these are steps that many early stage issuers, and not saying they're all early stage companies at that, often want to overlook. They think it's just direct response advertising, the one liner on the deal. Let's run it again. Let's get a huge return, where if you look at the content channels for any of these brands, they're highly active, organic, maybe not even getting a huge response visibly in terms of social media engagement metrics, but every day, several times a week, new deals that are being put together, updates for different states and their customers in those states, updates talking about where the founder is this week, and more video of them talking, more imagery, more partnerships. Hey, look at this investor from Shark Tank that invested. Look at these government officials who are talking about the brand in a positive way. Look at these current events that are happening in the world of mobile, and what that means for our privacy, and what that means for our users, and why our product is more relevant as a result of that. And then taking the most successful organic content pieces, running it as paid advertising, putting large budgets around it. I mean, I could tell you all of these groups spend a tremendous amount on advertising. There are different ideologies in the space on whether advertising works, whether it doesn't. Top Reg A issuers all running high amounts of advertising, of paid media placements, getting significant amounts of traffic, in comparison to other issuers in the regulated investment crowdfunding space. And again, not just the same evergreen ads that are running again and again and again. Sure, there's repeat creatives that are historical performers, but always something new that's being tested and then optimizing towards what's working best. And you want to talk scale, these are the groups that you want to look at. We like to use memes here in our presentations, make the educational content more fun. Public relations, kind of a big deal. Successful campaigns leverage financial publishers, speaking to investors, in many cases, investors that pay for the content. They're subscribing to the email newsletters to get the exclusive picks, celebrity endorsements, a present in the top campaigns, and existing audiences. So strategic advertising strategies and significant traffic generation. Again, that's in comparison to other deals. You know, some of the Fortune 500s may have more traffic on a daily basis, but in comparison to these other types of offerings that are targeting the same investors, use of perks to convert customers into investors and vice versa. Almost feels like reward crowdfunding on some of these entertainment deals that we work on and see in the space, and all of the different credit in the films, show up to the premiere, all of the perks, things that money can't buy in many cases. In other situations, it is the product, and you're getting that as a bonus by purchasing stock. Campaigns can run longer, and pivoted strategies when needed. Treating the process as a marathon is something we preach. Uh, in 2023, the average campaign was about 4 months. Meanwhile, all of the deals that we looked at on the slide before, I mean, these are years deep into their campaign. Each one of their initiatives has been live for significant amounts of time just on this round. So when I hear about a 2 month, 3 month run, groups that think they're going to hit the full 5 million on Reg CF, or even the 1.235 before audited financials are needed. When I hear about groups that think they're going to do 50, 75 million in a few months, I really point to that word marathon. And sure, you could scale aggressively once it's producing for you. We want the analytics to direct that decision, not just thirst, but be able to see, a positive return on ad spend, an effective marketing efficiency ratio for how much has been spent and how much is being raised. But we've had deals that, it took 4 months for them to hit, the full million. And by month 8, they were at those upper seven-figure levels. They did hit, Reg CF limits, and in some cases limits for how much they could raise. But if they had stopped, 7 months, 6 months, that they would not have gotten anywhere near what they produced at those end dates. So I would definitely point towards longer timelines. And we certainly see that true with the majority of the most successful campaigns. Some Reg CF issuers, some of the WeFunder community round issuers have a large audience and are able to do, 5 million high amounts in very quick windows of time. Obviously, we think that's awesome with our passion in the space, but most groups are not in that category, and even if they have that large audience, have not been able to produce those results. Where if they were live for a longer period of time, continuing to test, continue to do what's needed in between those initial launches and scale, they'd be able to get to much higher levels. And looking at PR, the more you're able to point to notable trusted voices and show that they back the deal, they back the company, the more confidence you're going to be able to establish in a prospective investor audience, especially a cold investor audience.
I was going to say on the PR side, Jason, that I love press releases, especially at the very beginning of campaigns, right? If we do have more time, then great, because you want to really build up the top of the funnel with broad prospecting. And a fantastic broad prospecting tool is the press release. You can, get people who care about what your company mission is, and you're reaching brand new audiences, right? So it usually takes longer to convert people who aren't familiar with your brand into investing, which is why you really want to stack a lot of those broad prospecting activities at the very beginning of the campaign. Yeah. Anyway, that was
And what do the numbers this year of investment say about equity crowdfunding as a whole? Stable overall amounts raised with more issuers live compared to prior years, as we talked about. The median amount, as defined to us, and as we see when we go through the advanced search of King's Crowd, 50% of campaigns, the median raised less than 110K, while the top 7%, based on 2023 numbers, and very similar for 2024, top 7% raised over 1 million. So it's how I kind of picture the space of the bottom 50%, pretty stagnant. Sure, this could include smaller rounds. There are debt rounds running on platforms like Honeycomb. There's what's referred to as mom and pop type businesses that are only out to raise 100K. This reflects success for those tier of issuers. And then the top 10%, 750K or more, top 7% million or more, they get all of the investments. They get the high volume. So it's all about, for us, how to position issuers as that top 10% in, issuer, and get that crowd effect, that halo effect around the offering. November stood out, likely due to post-election confidence and strong campaign closings. We saw a lift, it was calculated, in the industry, hoping that continues, and it are seeing those type of numbers here in December as well, but through 2025.
Not all industries are the same. It's true. Investor appetite does kind of vary by sector. And it's constrained generally of these equity crowdfund at the as an equity investment with limited transferability, right? So a lot of investors do tend toward potential deals with liquidity options. Jason, what would you add to
Just stretching my neck, by the way.
that?
Not shaking the head. They have all those memes about, once you hit your 30s and you sleep on your head the wrong way, and it shows a guy in like a neck cast. I stretch my neck a lot on these morning presentations, but here on the West Coast. But med tech, farmland, real estate, these are just a few categories that we've seen, higher volumes of inquiries from issuers. We've worked on a larger amount of deals. EP1 did very well and, closed this month. Categorization of sectors remains complex with overlaps across industries. the medical industry, the wellness industry, we may have some pixel tracking limitations in 2025 on Meta. There's new regulation being added there. I'm curious to see how that works for investments and list uploads. I've run into some issues with list uploads for medtech even here this year, but historical advertising reasoning behind it of not targeting people with a medical issue and tracking all the way through. We do see that transfer over to the investor side at times, but as a whole, biotech, all of these verticals have really embraced regulated investment crowdfunding at a larger level here this year. And when we see issuers succeed, we often see more groups from that industry reach out to us. We're watching that right now. Real estate, the margins, the valuation, property values, all have been tougher to apply some of these same type of marketing spends, advertising spends, and fit into an effective model. But watching far more groups get involved on Reg CF and Regulation A plus, not just the Reg D 506C deals, 506B, which we don't touch as much because it's lack of solicitation. So as an agency can support on the marketing, the messaging, the way it's presented, but outreach is a different game limited to your existing audience on 506B. But as a whole, I've been speaking at more real estate events, getting involved with larger sponsors, have an exciting list of deals in planning that are going to be rolling out next year for us. And that's usually a reflection of what we see happening in the space. So success and failure in sectors. Failure often linked to campaigns with unclear value propositions or weak marketing efforts. We go through the top performers each week, not just of our deals, but in the industry. And as a team, we'll put together a list of conversion rate optimization notes for an offering page. We'll use that in our outreach at times, building new relationships with issuers and talking about opportunities. How the messaging, the visuals are not doing the brand, not doing the offering full justice. In some cases, it's just pitch deck transfers to an offering page, and there's a lot more opportunity there to reflect more of what you would see on a top issuer's offering page and how it's layered with social proof and third-party validation, something we talk about a lot as digital marketers because people don't believe what they see online. Also, really simplifying the value proposition down. I mean, you need to make sure your audience understands what you do and how you're going to grow. Um, you have to talk about the compliantly, but they need to understand it to a level where they are the expert. They can share with others about what you do in a way that justifies their investment as well as brings others to invest in the same deal. So, we'll run exercises like the 313 method, where you break an offering down into 3 sentences, and into a sentence, then into 3 words, and there's a power behind that. You want it to be easily consumable and absorbed. So when we see, paragraphs trying to describe what a brand does, and we're still left with question marks at the end, looking at these types of presentations all day long, we know a prospective investor is going to lose that attention, lose that listening, kind of like you're talking about there, Abby. So success tied to sectors with tangible assets or quick returns, as mentioned, farmland and real estate, could really go a long way. I mean, these are tangible assets, not going to see the same type of loss, even on a bad, deal, a bad rollout that you would with, let's say an early stage mobile developer. At the same time, the potential upside looks different. Growth may not be in the same multiples, but regardless, it's all about how the story is told, who's telling it, and who else is validating.
So hard to get it really simplified enough, especially for these sort of sophisticated biotech deals, right? Because it could translate to really any sector, but oftentimes companies are more accustomed to just like product marketing type of discussion about what it is that they do and how they tell their story. It can be very different in how you want to tell the investor value proposition, right? And so oftentimes we find that groups haven't shifted the focus yet away from how do they sell their product instead of how do they sell their security, right? And so I love that part of when we get the chance to work with companies on how to tell the story for an investor audience. That's a lot of fun for us, and it often does help the conversion rate, right? Because I think I said it before, but that offering page is so crucial in terms of, and that is where people are going to click, like invest now, and they make their decision, and we do we have make a lot of effort into bringing them back to the offering page repeated times. We don't expect generally that they're going to invest the first time that they encounter your brand. So part of success is repeating your message in creative new ways to see what lands, and then scaling toward what you see working. Simplicity in the messaging couldn't be overstated.
Mm-hmm. That offering page needs to be the centralized location for all information and needs to sell. And it needs to do a strong enough job upon first visit. That way, all the updates that occur in the content marketing, the retargeting, get audiences further and further down the funnel to their action. So we saw March and April strong levels here this year. November, significant boom, ending with 33 million. Significant start and rounded out well. Individual campaigns greatly skew monthly data is something I note to the team here as well,
Mm.
where a few deals that do 5 million, 3 million can make the difference from 25 to 33 million or 23 to 33 million, an underperforming month to an overperforming month. April had a lot of deals closing with that extra filing that was needed. It was a very strong month accordingly. Closings often have that fear of missing out feeling, and you see a lot more activity. So, 10 deals that do an extra $1 million during that closing, which is a small percentage of the deals that, are live at that period of time, can make all of the difference. And as we looked at, 50% of issuers, they're not going to do more than about $7,500 in a given month. The top 10, usually $500,000 or more for the month. Top three, usually, million, multi seven figures raised that month. Months where it extends to the top five or, top six. It is what's accounting for that growth. So
In
more of those
April, there were
issuers
about
that are able to
100 deals that
push make
closed.
the difference. Yeah, yeah, I think it was closer to 200 at that. It was high volume that had to close in that period.
So that really drove a lot of that increase, which is great, right? You wouldn't want to see all of these deals closing without seeing that spike in total investment. That would be a real, bad note on the industry. But no, we saw 200 deals closing, and we saw greater investor participation, and I think that's just a overall good sign for the industry.
And you could see June, July, May had some deals trickling, but June, July was just over 20 million. So it was really only a few stronger deals that would have needed to push it to 30 million. I kind of look at 30 million as an average month for the space, about a million a day. When I look at the weekly levels, about 7 million is where we want to see things. But it could just be a few issuers that delayed a launch or weren't live at that time. Industry implications. What does the success mean for the industry at large? Increasing maturity in the industry of seasoned issuers raising higher amounts. Again, those repeat issuers raising more. There's more capital coming into the space, especially as they're marketing different verticals in many scenarios. Growth and repeat campaigns and larger valuations leading to more liquidity events. There's been more IPOs this year. There's exit and failure tracker on King's Crowd, and you could see the activity, the growth there. I think more investor success stories are going to bring more retail investors into the space. So, another thing that should mention, board member at the CFPA. There's other things in the works, such as tax incentives for investors, and hopefully that gets included in the next tax bill. Tax credits for investments. Right now, it's public information. It's being proposed at 50% of investments up to $2,000 for the year, but $1,000 back as a tax credit for retail investors could really stimulate activity in the space, especially with that awareness among accountants and recommendations to their clients. So, more that anticipating in 2025 that was a result of conversations this year. It's been a educational experience for me to watch creators of the Jobs Act of Title III of Reg CF lead those meetings, and I've been able to sit in those, the Senate Finance Committee. There's been similar meetings with the House and some things going on with the SEC. So it's really exciting to watch and look at the space, and would put us in a timeline of infancy. And as there's more success stories, there's more narratives driving investors into this area and looking to add these type of deals into their portfolio. It's going to lead to growth for everybody and be a win for all sides of the table.
Right now, Reg CF's limited to $5 million. It's the cap. Um, and, only a fraction of the issuers hit that level. But the ones who do could absolutely do more. And it's a hard cap on how much you can raise in a year on Reg CF. So I agree with this. It would, you know, it could potentially open things up, especially for the top raises, as opposed to a Reg A plus, which is extreme, like so much more complicated on the auditing front, far more expensive, takes longer. It has a much higher cap, but Reg CF is actually not too hard to get going. Would you agree, Jason?
Yeah, there's Regulation A plus issuers that are likely going to run Reg CFs in between rounds to be actively raising while the filing is being worked on and that approval process is taking place with Reg A. Also, it's very few Reg A deals that surpass $5 million. Uh, Not too many live that are being tracked right now outside of real estate and fractional deals on King's Crowd. It's about 32 live Reg A issuers, and you can see there's only so many of them that are past 5 million. So Reg CF could be great option for many groups. Highs and lows of the year. Strong fundraising months. We talked about March, April, November, and successful campaign closings. Uh, some would say you want to advertise, you want to market as much as possible in the early stage of your campaign. King's Crowd points out how important the first day, the first 2 weeks of a campaign are, which does not always mirror what prospective issuers are speaking to us about. They want to go live, see what their audiences do, kind of figure things out from there. When reward crowdfunding would say, raise a third of your goal or more in the first 24 hours, or there's 80% chance you're going to fail. But regardless of whether you have a strong start or it picks up later, the more people you get to that offering page, that's the larger your retargeting pool grows, the more likely you are to see success. And during that closing, you may see a dramatic spike. We've seen campaigns where we're brought in for the last month, 2 months, and it's kind of slow. Then the last week or two creates a strong marketing efficiency ratio for all activities. And we then ask ourselves, why didn't we push to have more traffic running even at marginal return on ad spend levels, so that once it averaged out to a strong level at the end of the campaign, there would have been a lot more volume behind it. There were also some points this year with political uncertainty. Mid-year impacted investment activity as defined to us by investors. So looking at a few things there. And getting to the last slide here, may have a couple minutes for questions, or could look to follow up offline with any groups. Often get a lot of messages on LinkedIn afterwards. You're welcome to post something here or say contact us or whatever it is afterwards. But just to close out, the future of equity crowdfunding has massive potential. More established companies are using these exemptions, regulated equity crowdfunding, regulated investment crowdfunding as a pathway to IPO is common. It's not everyone's path, but we're seeing it happen a lot more and have been part of success there this year. Increase in repeat campaigns and higher valuations, and continued industry growth as larger groups participate in capital raising. What's good for one issuer ends up being good for many others, on the same platforms or using the same publishing partners. So, excited to see what 2025 is going to bring. And it's been, very interesting to see where the movement has been, where the growth has occurred this year.
Yeah, it seems like we're kind of in a bit of a rally right now, and hopefully it holds, right? Be great
Hmm.
to see the industry overall just raise more money every month. We can hope.
Absolutely. And, any questions that you guys want to address, have another minute or so here. But as I mentioned, encourage you to reach out to Abby, encourage you to reach out to myself. We're deep into 2025 planning conversations for many issuers. I see a question here about budgeting. A number that's been used in the space historically has been 10%. If you're spending 10% uh, uh, on marketing and are able to see success, so about 100K on a $1.235 million round, you're in a good place. We don't encourage groups to spend those amounts uh, until they're seeing results. So it's all about finding a good starting point, something that's comfortable yet meaningful enough, and then ramping up as you're seeing performance. Um, and
I see this another question here about secondary markets, which I think is absolutely crucial
mhm.
into transferability. I mean, right now, equity crowdfunding investments are very hard to transfer to other people, to sell, to find liquidity moments. I think that should really help. Jason, what do you think?
Yeah, haven't seen the type of traction on secondary markets yet that I know is going to be possible down the line here. We've seen groups IPO this year and look to have enough activity now so that once they go live, retail investors are trading and there's enough volume on a daily basis. But it could speak to the quality of the deals. It could speak to the appetite. It could speak to the valuations. Um, there are different creative, payout and exit stories that are included with groups that have more secondary interest. But it makes it that much easier for an investor to know, hey, I could buy in these public private markets, and I'll be able to sell in you know the appropriate windows of time on these platforms. So it's been a story that has been told for several years now. Hoping to see that pick up more in 2025. Uh, I think we're more focused on raising more capital, having more successful raises for our clients, and not all of them are looking to jump into those type of secondary, markets as much as play for their exit, their liquidity events, going public perhaps. Uh, so I find each exit strategy is a little different, so it wouldn't apply to everyone, but there are groups definitely pushing for it hard in the industry. So, going to wrap here. Want to thank everybody for tuning in to our final webinar for the year. Have all types of content projects we're doing with partners in 2025. Please reach out if you have any ideas around content as well as campaigns. And Abby, thanks for taking the time to hop in today. I know we're going to take more of the biz dev angle with Danny and to hear about what you're doing firsthand on campaigns. I know for me has been insightful. You're in far more of these conversations on a daily basis than I am. So I think this has been a real treat.
Thanks, Jason. Excited
All
to be
right.
here.